This is Phil Ratcliffe with Rebel Financial, and thanks again for tuning in to our weekly live stream. This week, I think we have a great broadcast for you guys for something that's very pertinent to a lot of our viewers, a lot of our customers and clients. Even if they've already been through this, then we'll have grandkids coming to it. And we have James McDougal here from Kemba Credit Union. We're lucky to have him. They're neighbors with us just right across the parking lot. So James has been in the banking industry for over 30 years with Chase, and then for the last 4-some years with Kemba. Mm-hmm. So could you tell our viewers a little bit about, what is the difference between a bank and a credit union? Because I still think a lot of people get confused about that.
So the basic difference, Phil, between a bank and a credit union is that a credit union is not for profit. So we don't have shareholders that we have to be responsible for or make profits for. Mostly when you become a member of the credit union, you own the credit union. So you attend all of our meetings, with our board meetings and those kind of things. And because we're not for profit, we're able to provide better interest rates on loans, higher interest on savings and checking accounts, because of our nonprofit status. And so we have a more community type of flavor. Most of credit unions are community based.
Yes.
And so there's not this big corporate feeling where the money goes out of the city, out of the locale into some corporate giant, but it stays right here.
Stays here
in the community.
And there's not CEOs making huge profits. You're going to get a lower interest rate loan or get credited a little bit higher interest rate on your savings or what so.
That's correct. And those decisions are made locally, not from somewhere in New York or...
Yeah, I mean, I'm personally a member of Kemba and USAA, and I remember Kemba just recently sent out asking for people in the community to be on the board as well, too. So that's pretty cool.
Yes, we have just regular people that have become board members of the credit union. So
awesome. So tell us a little bit about Kemba and the history of it, because I think it's an awesome history of where Kemba came from, who they serve, and how that's developed over time. And I don't think most people understand that.
So Kemba had its origins with. So Kemba stands for the Kroger Employees Mutual Benefit Association. So it was started by bakers in the Kroger Bakery downtown, near Cleveland Avenue, in 1933. So from there, they expanded the membership to where anybody that lives in a 7-county region can become a member if you live, you work, or you worship. And then, or if you're one of our partner 200 plus 50 select employee group companies, you can become a member of the credit union as well. So we've expanded that beyond the Kroger. That's
great, because I think a lot of people, even still, don't know if they're allowed to join the credit union because they think they have to be a part of some group. And if you live around here, you're a part of our county, so you can join.
Yes, sir. So it's just 7 counties, and it covers a lot of people. So mostly all of Central Ohio, you can be, if you live or work or worship, you can become a member of the credit union.
Okay. So tell us a little bit about where lending institutions like credit unions fit into funding for higher education.
Okay. So basically, Ron, we were talking earlier about the 2008, the mortgage crisis, and that's about the time there was a student loan crisis. And so many of the major financial institutions, banks, got out of the student lending space. And so credit unions are coming in to fill that space where the financial institutions, the big banks, the Chases, the Fifth Thirds, have gotten out of it. So Kemba stepped into the space in 2010. We started doing private student loans to help families that fill that gap, and because it's an important funding for education to be able to fill that gap. So a lot of the credit unions have stepped up to do that.
Okay, and you guys have got a great website. You guys can just Google Kemba student loans. But there's this Kemba.org is their website. I think they've got a specific subsite for it called Kemba.studentchoice.org, and it does a great job of walking people through, where do you get money for college, whether it's through federal student aid or federal loans, and then tapping your loans on top, because education's become expensive, and if the government's only going to loan you out, a maximum of like $8,000 or $9,000 per year the first year or something like that?
It's $5,500 the first year, and then it
For the subsidized?
For the both.
Okay.
If you complete the FAFSA, you're eligible for basically to get federal funding.
Yeah.
And it includes a student loan that could be subsidized or unsubsidized, which means the subsidized means the government's paying the interest.
Sure.
And subsidized means the government is not. And so it's $5,500 for a freshman, $65
Gotcha.
for sophomore, and then $75 for junior and senior year.
So it steps up as they go through. But still, for a lot of colleges, and plus to be able to live if you're not going to work, it's not going to be enough.
No, it's not enough, and that's why the more you find more financial institutions, credit unions stepping in to fill that gap where the big banks left out.
So where do you find, are people, so like there's the Stafford loans, which is like the student loans, and Perkins too, but really Stafford does everything, right?
Just about.
And then there's the plus loans for the parents, and then there's the private loans, right? So those are pretty much the three. So how do you find most people are kind of putting those three together to help pay for their kids' college?
So what we're finding now is that a lot of families have saved some money, and so they're not borrowing as much on average, which is good.
Yeah.
And so they are borrowing us to fill the gap, and so they take the maximum amount of the federal, and then they come to us to provide the gap.
So what's the difference between your all's like private loan costs and terms versus the plus loans, like if the parents were to take the loan?
So the plus loan is through the government. It's funded through the Department of Treasury, but our rates are more competitive. So they're usually fixed rate, and then sometimes the rate can be better, but what families don't understand is that usually because of the sequester, there's a 4% plus fee that makes the APR of the loan much higher than what the government is just stating.
Gotcha.
So
plus, then the loan's totally on the parent rather than the student, right?
But the parent can defer it while the student's in school, just like the student can defer it while they're in school as well.
Because I found a lot of our clients don't necessarily like the idea of plus loans just because they want their kids to pay. Now, of course, they're going to have to guarantee the private loan on the student, but the student's going to be number one to pay on that, right?
Yeah. So one of the good things that we're doing now is, and we'll probably get into this, is that we are helping families to be able to refinance that plus loan to the student's name. The government doesn't have a mechanism to refinance right now. You can only consolidate.
Sure.
We are helping the qualified students can assume the debt that their parents took out for them while they were in school. We can put that plus loan in the student's name. We're one of the few lenders in the country that can do that. Kemba.
That's awesome. Because I was looking at your all's rates, and it was like 6 to 6.5% right now, right?
That's for the undergrad.
That's really reasonable considering that it's unsecured, right?
Exactly. So, yeah. And I always remind families that when they see that the rate on this federal student loan is 3.67.
Well, that's just a Stafford that you can't get very much of, right?
Right, and it's subsidized by the government. We don't have the same kind of features and benefits, subsidies that the government does. And I remind them that it's a private loan unsecured, but people are pretty reasonable about it, and we have pretty good success with getting people to do it.
Sure, absolutely. I would think that a lot of plans that you do would be a mixture of the Stafford and your loan.
They are.
Because it's just tough to beat that.
Yes.
But it's just not very much. And people need to live and go to the schools that they need, or that they want to go to, or that they need to get the specialization that they want to do as well, too.
Exactly right.
So, we kind of put this information up here. You can go to Kemba's website, look down through, and it's got some links to, where you always start on this is like filling out the FAFSA, right?
Exactly.
And you were telling me they've changed that in the last year or so, right?
President Obama changed the rules on the FAFSA where now you can start as early as October 1st of the calendar year to do your FAFSA for the next academic year.
Awesome.
And so October 1st of this year, if you're going to go to school next fall, you can start doing the FAFSA instead of waiting until January.
So you can get things squared away and you know what's going to happen.
Right. And then the other good thing about it is that instead of waiting on to do your 2016 taxes, they're basing the FAFSA information on your 2015 taxes.
Which is really good for a lot of people, our clients. I mean, I had to have an extension last year, and that can be difficult.
And very difficult, and that's part of a lot of the problems where people have to file extensions or they have to estimate and then go back. Now you don't have to estimate because it's on your 2015.
Yeah, okay, awesome. And then this is what tees you up in terms of tells you, are you eligible for the Pell Grant, subsidized or unsubsidized loans, and then a lot of times the counselor will be involved with the school as well too, right? To tell you.
Counselor with the school. What the FAFSA really does is calculate what the expected family contribution is for the family, what the family can contribute towards the child's education, and then they base the federal aid based on, it's a formula, so they base it, whatever the federal they're going to give them based on what the EFC says when they complete the FAFSA.
Okay.
Yeah.
Awesome.
So when we always recommend that families do the FAFSA first and exhaust their federal options so that when they come to us, they're borrowing as less as possible because our loan is more expensive.
Sure.
Because it is private. But we want them to exhaust those federal options, which are much cheaper a lot of times.
I mean, absolutely, like on those subsidized loans, it is like super low. I mean, I don't know that anybody's going to beat that, but when the government's going to give money, I mean, there's nothing private, even when it's a nonprofit, that's going to be able to touch it. Now, I have seen a lot of clients after they come to me make mistakes with like refinancing to like Sallie Mae or something because they'll say, hey, do it to 20 or 30, but then they'll put them in like an 8 or 9% interest loan. And I'm like, ugh. It's tough because they want the lower payment, but they just don't think about how much more in interest they're going to pay. I mean, how do you guys deal with that, or how does?
So in school, we're pretty competitive on the in-school part of the loan.
Yeah.
And so what we do on the refinance side, we're even better.
Yeah.
So we do find the Sallie Mae's where they might have less restrictive underwriting than credit unions do.
Yeah.
But we find it's just yesterday I had a refinance loan where a young lady had a 10.5% under private student
ridiculous.
loan,
Yeah.
and our rate is half that. So
Yeah.
And so we talk about that, but a lot of times because of our underwriting might be a little bit more restrictive, that they might go to Sallie Mae, might improve because Sallie Mae is the 900-pound gorilla in
Well,
the
it's so
industry.
crazy to me because people think about Fannie Mae and Freddie Mac and Sallie Mae, and they're like, oh, it's the government, they're not going to do me wrong. And I just see over and over again that Sallie Mae has done that.
Sallie Mae is not a government institution, and so they're private, and they're the biggest. They control the industry. So.
Yeah. Okay. Cool. So maybe you were giving me an example of how you're getting ready to go travel and help a family out with their plan. Give us an example of like how you guys help people with their financing, like practically.
So when you go on our website, there's a place where you can ask for an appointment with me. Right down here, if you click.
Where is it? Oh, there we go.
If you click apply, let me see. No, you can apply now, but there's a place on there where you can select if you want to make an appointment with me.
Okay.
And, I get the email from the family member, and I'll sit down there. It is.
Oh, there it is. Just contact our student loan expert,
And
which is
it's just me, and so and then I'll sit down and meet with that family. And because of the financial aid experience that I have dealing with college and university, I'll help them understand the financial aid process, what their award letter, what they've been awarded, and then what they need to fill that gap. So I sit down with them and do that on the front end. On the back end, we have a lot of students who are not familiar with all the repayment options through the federal government.
Sure.
So I will sit down with them and talk to them about those, the consolidation, the income-driven repayment programs, all of those things that are available to them. And then I'll talk to them about refinancing, if it makes sense to make the rate lower for them by refinancing everything with Kemba.
Sure. So yours isn't just like an online process where they go fill it out and then there's something and then some 1-800 number person is trying to call them. They're actually going to meet with someone that knows what they're talking about.
They can, yes, but some people choose to do online because they just don't have the time because families are really busy. So they will do the online process. But I'm willing to be with most families, and I do that. I would say 70 to 80% of our families that get student loans, I meet with them and talk to them because they would prefer that, to be able to do that.
Awesome. Well, James, is there anything else you'd like to add on to like helping people with their financing and education funding goals or what so?
Well, I just want to make sure that everyone utilizes the free websites. Like there's free scholarship searches called FastWeb, which is the largest one. So try to exhaust everything you can do with FastWeb, so you don't have to borrow as much on the back end because we do the gap funding.
Apply to as many as you can.
As many as you can. Go to your churches, go to businesses to get as much free money as you can. Complete the FAFSA as soon as possible because the quicker you complete the FAFSA.
And it's not all needs-based. Some of it's merit. But a lot of it's merit-based these days,
well,
too,
the FAFSA deals with need-based, but
Yeah.
there's merit-based scholarships the schools offer, so you want to make sure you do that as well. But
Yeah.
in this business with financial aid, the early bird does get the worm.
Yeah.
And so if you file your FAFSA late, there's a possibility you may not get the Pell grants, the state grants that are available to you if you don't do the FAFSA right away, because they base their funding principles on what you do.
Absolutely.
On the FAFSA.
So tell our viewers how they can find you
Okay.
if they need to. Obviously, we showed on the website, but how can they contact you, Kemba, et cetera.
I'm going to give my number.
Sure, if you want. You know,
if you'd like to have more information on funding for college or refinancing your federal and private student loans, feel free to give me a call. James McDougal at 614-729-1306. Or you can consult our website and you'll be able to contact me that way as well.
Awesome. Well, thank you guys again for joining in. This was some great, valuable information, something that's available locally in our community. Support credit unions. I've always been a big fan of that. Join in for our next couple weeks. We got some great things coming on. Week after next, we're going to the West Virginia Optometry Association's yearly conference. So we'll probably have a couple live streams on from there. And then we're having the head of the Ohio Trust Authority, so like in charge of the 529s for Ohio, so come in a few weeks. We're having Joe Messenger, who's one of the best college financial planners that I know in the area, come on and talk to us a little bit more about the strategies of actually planning. So we got some great things coming up. We're going to have an intellectual property attorney come on. So tune in. If you've got ideas or you got questions, just post below. Post on our Facebook or YouTube. We'll get back to you. We'll put a couple links to some of the websites that me and James were going over right now. And we'd be happy to help in any way we could. So thanks so much, and have a great weekend, and happy Halloween.